Hi, this is Mac with PriceActionTradingSystem.com, and this is our chart lesson for Thursday, February the 2nd. I almost said December 2nd. I'm trying to run a couple of months behind here. But anyway, uh, not much happening today. Prices spent probably most of the day within they spent the entire day within a 6-point range. And you can see the lows were down here around the 13.17 and 3/4 area, and the high was up here around the 13.24 to 13.25 area. And the best trades were really coming off this top or coming off this low. And if you were paying attention there, those were fairly simple trades. This was a great trade right here. As you see, prices reached down here, reversed, didn't hang around very long. This is very close to what rejection looks like. Once prices broke lower, they immediately reversed, closed almost on the high, and they didn't hang around. They took off. That's a lot better look of what I would call rejection. That's not strong rejection. Strong rejection would be a bar. If this bar was gone and it opened up and turned down here and closed on the high and then shot out and continued on much higher. I get asked about rejection a lot. Let me just look back across here. This is rejection right here. See how prices broke lower, reversed, and just took off like a rocket. That's rejection down here at this lower price. So that's a lot better look of what rejection would look like. Yeah, anyway, as we see more of these in the future, I'll point them out to help you get a feel, because some people get confused as to what rejection really is. But if this is acceptance of these prices temporarily at this price. See how prices got up here, even though they couldn't go higher, they didn't immediately break lower, they got stuck right in here. Well, that's acceptance of these prices. Even though it sold off temporarily, prices were, the market was accepting these prices. When the market reverses off of something like this right down here, they didn't accept prices down here this time. They reversed quickly. So there were a lot of people feeling that that felt like the market was undervalued at this price, and they began buying. And that's what you'll see. You'll see this buying and selling and rejection usually come at strong support and resistance areas. So that was really your best bets today. And I didn't mark a trade up here simply because there was a lot of overlapping bars, and because we were above this resistance area. But there's a couple reasons you could have gone. As you can see, you had a first entry long here, a pullback, and this is really two legs back to the EMA, two legs back to the trend line, even though we did have a breakdown here and two legs up to a new high. Because it tried to go higher twice right here and failed both times, you could have gone short right here, and you could have even gone short right here because we had this long trap. But it's not a great setup. There was nothing wrong with it if you wanted to be aggressive, but the better setup came when we pulled back and retested this breakout area and went lower again. And because you turned higher here first and then went lower, you would have gone short right there. Always got some interruptions, seems like, every time I try to do our chart lesson. But anyway, you could have gone short right there, and it hesitated a minute, but you see it sold on off pretty fast. And then we had another two-legged pullback, and this trend line, you could have drawn it the way I drew it. I drew it off these first two bars here, and that generally will give it to you. Sometimes it's the first two swings. So even if you do it off the first two swings, like that right there, you still got the same setup. It even looks better there because the turns were really right off the trend line to the tick. So I didn't quite have mine drawn right, I don't think. I think this is more accurate, what I've got right here. But, sometimes you get it right. But this just shows you, like I talked about before, you don't have to get it exactly right. And if you draw it the way I had it drawn, you still get the same result, except you actually get a little break of the trend line right here, and then two legs down to a new low that turned exactly off this where this double bottom was from the overnight. And you see I used the closes down here, and that's where it turned. We broke one tick lower reverse. That's a great short trap. And so I had this drawn in here perfectly. And but I really think this was the trend line, and then we had the reversal, and then this is the trend line coming up, which we got to break a couple of legs up, made a double top up here at the, and you probably would have drawn this and moved this down because there's your last closes, and you see how that would have worked out perfect for this double top, no closes up there, and then prices sold off. Plus you kind of broke this trend line we had coming up here, so that was a signal too. So your best trades coming down were this trade. This was a really good one because not only did you have you didn't really have this trend line yet unless you drew it off the 2 bars like I did, but you still had this area right in here, this resistance area, this former resistance, and that was a good sign. Prices broke well below. Here's a good sign to show you that this trend was reversing. This is what I'd look for. First, you had the trend line break, and regardless of how you drew that trend line, even if you'd drew it way down here, you still had the break right here, but I believe that was it right there. You had the break, 2 legs up to a new high, so that was one clue. But let me show you something here. You see prices broke above this top of this resistance, failed, and immediately sold off. And this sell-off went much lower than this swing low and this swing low right here. So it broke lower than 2 previous swing lows. So that's showing some real bearishness and a lack of strength. And then when it pulled, and notice too, it's also well below the EMA after breaking up here and trapping all these longs. So that's a good sign. And usually after getting one leg like that, you know you're going to get at least one more. And there's your next leg. And I haven't measured this leg, but I bet you if you measure it, it's probably, it's almost exact. If you draw that, well, I don't have it quite drawn right, but if you draw that right there and then measure this next one, you see that's exactly where price is closed. So that's pretty close to being a perfect measured leg. And then sometimes that's it, but in this case that was one leg, and then these 2 legs was another leg. And there's actually 2 legs inside that leg, and I imagine if you draw this right here, and you get another leg, and you see that right there, it's pretty close. The support held down here. So always watch for your 2 legs, and sometimes there's 2 legs, and you see even in this little correction right here, there's a pullback. Actually, prices pulled up, pulled back, and went up again. So there's 2 legs right there. That's a 2-legged pullback to the EMA and the trend line in a declining market. That's a great setup. This is actually a nice double top trap at the trend line. I drew it in a green circle simply because look at all these overlapping bars. That's often a dangerous entry. But if you took it, it wasn't necessarily wrong because we did have 2 tries to go higher that trapped people right here at the trend line, and we also had enough room to still scalp out before we got down here to this area. So if you took this trade, it was okay. It was a little more aggressive. It was a little more risky, but it wasn't a wrong trade. It just was not a great setup because of all this overlap right here. And anytime you enter an overlap at the low or the high going long, or the low going short, it's going to be a risky trade. And but this was a pretty strong sell-off. And it didn't surprise me. This low was actually a little lower than this one, so prices were still weak. And what they were doing were coming back and testing this area right here from the overnight. And when it held, then it was off to the races back to the high side of the range. And this was a nice double bottom right here with a reversal bar, and then that gave you the swing for your trend line. There was never really a good setup here, and this is a good example of why. Of what I was talking about over here. You still got room to scalp out before getting up here, but as you can see, they trapped people first, ran the stops, and then went up here. And so it's always risky entering, and when you get this congestion and all this overlap, it's a risky entry. And I will show you this entry right here. You got your high, your pullback, a another move up, and then another move down. So that is a two-legged move back to the EMA. And notice how nothing closed below the EMA right there. That's a good signal that prices are going to go higher. And I marked this one in green as well, simply because there still were a lot of overlapping bars, but we had a trap here. We had a failed break. You actually should have had your line right in here. This is a double bottom across here, and that's a failed break below a double bottom. So you got people trapped, and you got enough room to really scalp out before you get back up here. So going long here was okay, even though it's questionable again. Going long in here I didn't like at all, and that's a good example of back here. But this one, we still had the room to get out up here, and when you got the trap and the two-legged pullback right here to the EMA, that made it okay to enter because it's a second entry long. And if you're not good at seeing these things, you may not have seen this second entry in here, but I would have waited till right here to go long, and you can see it would have been awfully scary. And if I'd have still been trading here, I might have taken a tick or a couple of ticks when it couldn't go higher and just gotten out. So I don't know if I'd have even gotten a full scalp out of this, because anytime I enter a trade, let's say these bars are not here yet, and that's what you would have seen. So that looks pretty good to go long, because you know you're going to get a retest more than likely, and I would have gone long right there. But then when this bar did that, and then your next bar was another doji, I would have probably went ahead and put my order to get out with one tick or at break even. I probably would have tried to get a tick out of it, and then there comes your next bar, and you see I would have got out with a tick right there. But if I wasn't out right there yet, I would definitely try to get out at a tick or break even. And you see you would have got one more chance to get out, and then prices broke lower. So if you were tightening your stop, you might have gotten stopped out with a tick or so loss there rather than a tick or two of profit. But you see prices did end up working up, and that pretty much follows our rule that we traded up into this congestion, so we're probably going to break higher. But generally there will be a sell-off first that traps people, just like it did here, and that's the reason I still kind of like this trade. I wasn't trading by this time of the day, so I didn't see this price action till later in the afternoon. So once you see it after the fact, it makes it a whole lot different. But anyway, I drew this one in green because if you took it, it's okay, but I doubt I would have made any money on that. I might have got a tick or two out at tops, probably all I would have gotten. I wouldn't have held on when this thing started overlapping. So I try to tell people that if you enter a trade, but don't take that to an extreme, you can't tighten your stop too much and jump out of every trade, because you'll end up never making any money. So you have to sometimes trust the trade. But when you've already had all this overlap over here and you're going back in it, and you've really kind of got a double top with nothing closing up here until this bar, that's not a good sign. And a lot of times they'll run that all the way back down here and test this low, or maybe this low, or maybe come all the way back down and test this low. And it's not worth risking your money. I'd rather get out with a tick or a break even than risk this thing turning and not going higher and giving me my scalp. So anyway, hopefully that makes sense. But that's pretty much it for today. There wasn't much happening. There were, I would say, 1, 2, 3, 4, 5, 6, 7, or no, 6. 1, 2, 3, 4, 5, 6 key entries that were solid trades. These two were iffy, giving you 8. And there were some other trades in here as well. You could have gone short up here. You could have gone short right here if it wasn't too late in the day. It was really close to being late in the day right here. But this was a good reversal right off that same high point again. And you can see that it would have been a nice, easy scalp as well. And that would have been pretty much it for the day. You actually could have shorted this right here, because you would have had your line down to here by this time, and it would have broken higher, created this little double top, and then sold off. So there was a nice short right in here as well. So there were some other trades, but I think that's before the market. That's actually before the market's open, and that's the reason I didn't have that one marked. I wasn't trading yet. And somebody asked me that yesterday too, so I'll comment on that before I call it a day. They asked me what if I trade the pre-market. or the overnight market, and I rarely do. I usually don't get to the office till I used to make it a habit of being in here ready to trade by 8:15 so I could watch the price action just prior to the open, because a lot of times you get your best move right at the open. And let's just see where this thing opened. Right in here. It opened right in here. So that was a nice trap at the open, and you see that's a nice move down and a nice reversal. The first 15 to 30 minutes there, if you're reading the price action right, there's some good money to be made, because generally, even if it's going to be a range day like this, you get some good swings, and sometimes you'll get them in both directions. But you got to be good at reading the price action, because you don't want to get trapped going long here and then watch it reverse on you. So, but anyway, I used to be religious about being in here at 8:15 and catching that open and trying to catch a good move. But since probably the last year or two, a lot of times I don't get here till 8:30, 8:45. I definitely like to be trading by 8:45 at the latest, because I really hate to miss that 8:30, but I'm not so strong about getting in here and being ready right at the open, because there's still going to be trades during the day if it's going to be a decent trading day. So my trading hours are basically 8:30 to about noon, and every once in a blue moon, if I have a bad morning, I'll trade the afternoon, but I generally don't like to enter any trade after 2, and my written rule in the manual is not past 2:30, because there's not enough time, and a lot of times all you'll do is you'll enter right in here late in the day, and you just get stuck in here and nothing happens, and you sit there and you spend 30 minutes and nothing happens, and you have to exit before 3 or 3:05 or whatever they take you out. They'll automatically take you out of your trade, and as day traders, that's one of the risks we take of entering late in the day. So I don't like to even trade in the afternoon, because you can see really from about 1 o'clock to 3:15, that right there was not worth fooling with. That is nothing but trouble right there. Maybe one good trade, a good short. And so I don't even like to hang around and be involved in anything like that, because there's just nothing there to make any real money. And so my trading hours are pretty much regular trading hours, but I try to be done by noon, definitely by 1 o'clock, and certainly no later than 2 o'clock. And if I'm in a trade now, if I enter a trade at, say, noon, and there's a strong trend and I'm making money and I've built up a few runners, I might stay with those to the close, but I'm not going to enter any new trades. So hopefully that makes sense. And but rarely do I ever trade the early morning. If I get here early for some reason and I sit down at my desk and I'm ready to go, and there's some good movement like this right here, yeah, I'd jump in there and trade that. But that's not my regular. I normally only trade the regular market hours, which for me I'm Central Standard Time, so it'd be 8:30 to about 2 o'clock. And again, I try to be done by noon. So hopefully that answers that question if anybody else had it. Stay out of this overnight stuff. Yeah, there's movement in there, but it is crazy, and you'll just end up, anytime I've ever tried to trade the overnight, I've made a little money, but most of the time I would lose money trading the overnight, so I don't even fool with it anymore. It's not worth it. You need to get a break and get away from it. So concentrate, unless that's the only time you can trade, and the price action still works, and if you watch it, the price action is still good. But look, from right here to, this was probably about 5 o'clock yesterday afternoon to 6 o'clock this morning, there was nothing going on. There were a couple of moves you could have scalped out and made some money, but is it worth sitting around all night looking at that stuff? Not to me. But if that's the only time you can trade, maybe so. But if you can trade the day hours, this is when the volume is here. And you can see there was no real volume today either. It just was not a good trading day for the most part. So there just wasn't much happening. So if you struggled today, I like these kind of days, because you know what's going to happen. You generally just keep testing each side of the range, and so if you get on, hang on with it and go to the other side. Try to get on at the low or the high and go to the other side, and you should do okay. But we're getting into close to 20 minutes. I'm going to wrap this up. I want to try to make these about 10 minutes, and they always end up being double that. So, but hopefully you're learning some good stuff and picking up some good points. And I'll keep doing them. But this is back with PriceActionTradingSystem.com, and we'll see you next time.